Good evening. Welcome to this call. It is Crypto Talk Monday evening. And tonight we talk is the Bitcoin bottom in. What next? And I see that I have that twice on my screen because I have to close that and then it will look better. My apology for that. And tonight we have a full program and we have all the different players in the room as you have with us every week. And we look forward to helping, assisting, and being with you and sharing with you tonight. And as I said, is the Bitcoin bottom in and what next will be our topic for tonight. But before we go and topic on anything, talk about the topic, let us first just go and find our crypto coach and our subject matter expert on crypto trading. And let's go ask him one or two things with regards to where we are in the market at this very moment. Thank you, Marius, for allowing the people into the room while I'm busy. And let's just go and ask Jason Ashington, our subject matter expert at the Crypto School on crypto trading. And let's just go to Jason and say, Jason, before we start calling everyone in and say, allow everyone to add, please, I've got my chart and I will pull it up now and share it after you shared your charts, my chart that I've shared last week and the week before last, where I had that nice accumulation zone that I never thought 2 weeks ago we will get to. And I would like to show you that again, to just show you what happened to that chart. And I tell you, I did not think that's going to happen this time around, but it did. So Jason, without further ado, please tell us what's on.
Good evening, everybody. Yeah, it's been quite a heavy 6-7 months now. In November last year, we topped out at 68,000, and it's been a slow bleed all the way down to where we currently find ourselves at 20,000 today. This time last week, we were at 23,500. At that stage, I even said, no, we can't get lower than this. And lo and behold, we actually broke through the 20,000 over the weekend. And there was a bit of a bear trap where we went down below 19,000. Price came immediately back up again, caught those that we were trying to short below there, below 19,000, caught them out. And then we had a nice push up yesterday, going into today. But it looks like that the stochastics on the 4-hour and the 8 are quite high, and we are due for a small retrace. That's what I think. I'm hoping so. So if we're looking at the 1-hour chart here, there's two people. So we're looking at the 1-hour chart here. Last week, this time, we were around about over here. Let me just close this off. 23,500. And from there, it's been a slow bleed up and down the whole of last week, up and down in this channel. And so then what happened was that we spent a few days here from the 17th right through, for 2 days we spent on this support here of 20,400, and we broke through on today. And we came down to the next support at 19,000, and we went down and we broke to the downside out of this channel, bear trap, got pushed back up again, came down to retest the break, back to the upside, retested it, and then we pushed back up above 19,000, and we pushed back up here to above 20,400 today. And you can see we've been in an orange rising channel, and we are starting to break to the downside again. And the reason why that is because if we go on to the 4-hour, you can see that the stock RSI is very high there. The 8 stock is also starting to cool down there. 12 hours also quite high. The daily is still at the bottom. On the medium-term time frames, we are sitting very high on the stock, and we are due for a small retrace. Where we're going to go to, we could come back down to retest this 19,000 level again. I can put a fib smith on here and check for you. If we put a fib smith through here, we can see we can come down to the 618, which is at 18,932, or call it 19,000. That could be a possible support level on the way down. If the leading sort of indicator is the stock market in the United States, and we've got a futures chart here for the S&P 500, and we've been in an uptrend here for most of today from 4:45 this morning. We've been in an uptrend in this channel. A rising channel is normally a 68% chance to the break to the downside. You can see we try to actually push up, we got rejected, and has come back into that channel again. Now, if we look at this number 3716, now, if we go back to the daily here on the S&P 500, we've got this white line that's been in place since January this year that's been acting as support. And we actually broke to the downside out of that support line last week. So we've gone below it. Current price is 3675. Stock markets are closed today in the United States, so we'll open up again tomorrow. But the futures are telling us that the number is 3716. Now, 3716 will bring us back inside this channel at the current numbers. The futures can change between now and tomorrow, but right now it's telling us we should be breaking to the upside, back inside this channel, which we're hoping will take place. But what happened here on Friday is that we broke to the downside out of the channel. We've actually gone back up and retested it there and started pulling down again. So we're hoping that tomorrow this number stays like it is, and we can push back up again, back higher above this support, this white support line. The other positive thing that is coming through here is that the Dixie, which is the dollar index, has been rejected once again. Let me go into higher time frames here. We did have an attempt to break out in the middle of May. It got rejected, pushed down, has gone back up again, created a higher high, and it seems to be being rejected again. If we have a look at the relative strength index, you can see that's the RSI. Where was I looking? I think it was the RSI. Has got a high on the 28th of April versus today, yet the price on the 28th of April was lower than compared to today. So this is bearish divergence on the daily. So we're hoping that we get a rejection here and the Dixie starts trending down, because that'll be positive for the stock market and for the crypto market. We want a weaker dollar. The 104.50 is a very strong resistance area, and it's great to see that we've got a bearish divergence here on the daily. The other concern was this 10-year yield. Last week, we saw the 10-year yield spike uncontrollably to the upside, and we saw it move from this 295% right up to 3.5% over a couple of days, 3 days, where it sparked up. But it looks like it's been rejected and we started moving down. And also on this chart, we can see there was also bearish divergence. I think it was on the daily, if not mistaken. It was, I forget what time frame. But anyway, it's great to see that it's been rejected and started moving down again. So that was the second thing that was positive for the markets. And then for the economy, we saw oil. You can remember what happened to the oil price when the Ukraine and Russia war was announced. It spiked up right up to $135. It got rejected there, came back down into this bullish pennant. And we've gone up and gone to this resistance of 125. It's got rejected there and it started moving down. So we've got a bit of a Wall Street cheat sheet here where we had the Fourier blast off top here and complacency, and now we seem to be trending down. If we go on to the week, we've been in this blue, massive blue pennant from 2011, before that, sorry, 2008, and we broke through here in February, no, it was March this year. And I think what's going to happen over the next couple of months is that we're going to come down and retest this area at around about $75, $80. That's going to give a lot of relief through to the man on the street, especially going hopefully into Christmas. I think because of the midterm elections in November, the Democrats are going to brag and say they've got the inflation under control and blah, 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 so they can get the votes. So that's another thing I'm hopefully going to see. We're going to get a bit of relief going into the last 6 months as far as inflation is concerned. The total market cap. Okay, so on the weekly, we were at 3 trillion in November, and we've gone all the way down. And I've got this orange support line here that comes from the COVID drop in March 2020. It touched again September 2020. And I actually thought that it would act as supports. You can see it did actually find support here for a little while on the 13th. There was a bit of support here, and then unfortunately it broke through. And it looks very much coin chart where we've got a white channel, acting in a white channel since last week. And we've actually gone up here to possibly retest, and now you can see we're breaking to the downside again. But can you believe we're sitting on 860 billion, whereas 7 months ago we were on 3 trillion. So the support
I promise you, I never thought we will see those numbers under $1 trillion again. I don't know what I was thinking, but I never thought we will go under $1 trillion again. So for me, that was terrible.
Yeah. Support area should be, let me reframe my words here, should be 850 billion, come down and retest that area there. You can see 850 is quite a big support area. Ethereum has been in a falling wedge pattern from last week, Monday. And can you believe Ethereum that was at 4,000 in November? What did we get to in November? 4,860 actually went down to 888. From 4,600 all the way down to 880. That was also on Saturday. We moved up, and you can see we're breaking down to the downside here. I would say we'll come and retest the $1,000 level. Okay, the Fear and Greed Index. I've never seen numbers like this before. You can see yesterday was at 9. I think on Saturday was 6. Saturday was also at 6.
That was part of that bull trap. That was at that extended bull trap.
But I've never seen numbers so low. I've seen a 10, but a 6 I've never seen. And you can see 6 is right down the bottom here. And I think the last time we had one of those was in August 2019 for some reason. Extreme fear once we've got below $20,000.
Jason, I know of a number of people that capitulated and fell for that bear trap and got out of the market.
That was a bear trap there on Saturday at 11 o'clock, at 10 o'clock at night. And then crypto bubbles for the week. Funny enough, how's that? For the week on the top 100. We've seen some nice moves to the upside here. Litecoin 20%, Ape 30. We've got Solana 21, GMT 30, Link 16, BAT 26, Beta 13, SNX 52.10. So there are a few Phantom 10. There are a few greens that are coming through here. It's not all red like we saw last week, which is a bit more positive. Now the question is, have we reached the bottom? I don't know. I've been calling the bottom now for the last 2 months. Been wrong. The only thing that's telling me that we could be at the bottom is the 10-year yield that I think is now stabilized, but it's still early days. The Dixie that I think has got a bearish divergence on the daily, starting to trend down. And I'm hoping the stock market has now reached the bottom, but still also early days to around that. And that's it for me.
Sure. Thank you, Jason. Yeah, we'll get back to you now. But yeah, it's just amazing what happened in the market in the last little while. If I just go to that TradingView chart that I had on here 2 weeks ago, and I have this accumulation zone in from 18th of May 2021. That's my wife's birthday, but that 2021, we have that accumulation zone in there, which we never ever tested until July. We were close to it, 21st of July. We had that sudden rise. And I really thought that 2 weeks ago, and let me just make it a bit bigger for you to see it. But 2 weeks ago, when we were on the call and we were there, and in this dotted line, that's exactly where we were on the 6th of January and 6th of June. I really still thought that we're not going to get into that accumulation zone. And what did we do? 1 week later, on the 13th of June last week, while we were on the call, just after the call, we had a free drop straight through that accumulation zone. We never even thought about it. We just had a free drop through it. And yeah, it's the market's doing what the market is doing. And there's not a lot that we can do about it. Yeah, thank you, Jason, for that insightful, just summing up where the market is at the moment. We want to go look at where crypto is and where we're going with crypto. And the question is the bottom in. And as Jason, he's so congruent. He's telling us that for 2 months already, he's telling us that the bottom is in. And it's so true, Jason. And thank you for your congruence and acknowledging for the last 2 months, we've been saying that the bottom is in. And I've certainly been one of those that kept on saying that. And yeah, it's not in. So before we go back to Jason,
Tony,
because I know
calling the bottom in has got its consequences. I have got bloody hands. I just want to put it out there. That means I've had to catch a falling knife a few times.
I've sent you a message over the weekend. You cannot catch a falling knife. Over the weekend, the price has just gone crazy. And it was that word or phrase that we use, you cannot catch a falling knife. I've seen it over this weekend. I've seen our price just stumbled. And there was no way that you could put in a reasonable price to say, I will sell at this. Because it was tumbling so fast, it's just gone past anything that anyone could come up with. They thought a reasonable price. And that's why I say I know of people that capitulated. I had the people phoning me over on Saturday, phoning me on Sunday. And I know of some of them that got out of the market in that bear trap. And that's why it's called a bear trap. But thank you, Jason. And we'll get back to you just now. But allow us to quickly go to FibSmith. And I assume we need to change this slide to have it a different in there, but you can see there at FibSmith. And our young gun, Andre Smith, a few weeks ago, Jason called him on this call, FibSmith, and he took a liking to the name FibSmith because he is the Fibonacci guy. And that's why Jason referred to FibSmith when he used his Fibonacci tool. But FibSmith, what do you say about where we're at in the market?
Yeah, thanks, Jason. I really like this name. Yeah, guys, a friend of mine, he says he is praying for Bitcoin to go up, and I'm praying for Bitcoin to go down, because every time he speaks to me, I tell him that I want to buy Bitcoin there, and he wants Bitcoin to go up. But anyways, yeah, guys, catching a falling knife. Personally, and this is just me personally thinking, I don't think the bottom is in yet. And now quickly, I can't tell you guys, okay, exactly this is why the bottom is not in. The main reason I think it is not in is because I don't have all my orders filled. Let me quickly share my screen here. Okay, so this is Bitcoin on the weekly. Luckily, I got my first order filled, and I have 2 orders lower than that has to get filled. At $14,000, I think that one is going to get filled, and at $11,000. That one, I'm not sure about that one, but we will see. Anyways, guys.
We've seen another screen there.
Oh, is it? Okay,
Yeah.
wait. Let me just share again. Can you guys see it now?
Much
That
better.
sounds better.
There we go. Anyways, so you can see I got this first order filled. So I'm waiting for those 2, but I'm not sure about those 2. And I'll share you guys now with a tool that I want to show you guys. But before I go to that tool, this is my Fibonacci tool. I just quickly want to share with you guys something at the total market cap. Okay, so it looks a bit busy. I'm sorry for that. But one thing I want you guys to notice, and I'm going to go back to 2017, and you can see here, and this is the fib tool drawn from the top to the bottom. And I'm going to take this.
Give the dates there.
Okay, so this is 2017. The start of the fib is the 1st of January. The start of that is the 1st of January. And then I quickly want to show you guys something. So if you take it to the 5th of February, that low that you can see, there's a low wick. So you can, if you take it from that week, you can see the total market cap retraced to the 382 area, the 0.382 area. And then it went on lower. And the next low, it retraced to the 382 area again. So you can see it really respects that low, that 382 area. But there was sometimes like that one, it obviously didn't take that one and it just went lower and lower. But you can see here from this area, look at that drop, boom, 382 area, and it went on again. So now, let's go to this one. Just open this one bigger. So most of the times, it really respects that 32 area. So if you take the high from, so let me just move this away. So if you take the high from 8th of November, 2021, and till the drop of 29th of November, you can see, wait, let me just move this. Yeah. So you can see with that drop, it went on, boom, 382 even went to the 50 area and went on lower. And if you take it to the low of 24th of January 2022, just above the 382 area and went lower. So in theory, it can maybe now, if this is the low here, it can retrace to the 382 area, which is the get out liquidity, because a lot of guys actually thinks that the bottom is in, and that can be a bull trap or whatever you call that, and then it can go lower even than that. And then another thing I want you guys to know, if I delete this, if I take the bottom with the fib tool, I'm not going to take the exact bottom, but it's going to be more or less the same outcome. But if you take that bottom till that high, and this is from the 2017 bull run, you can see we went below the 618.786 area into the 786 and 887 zone. We went below that. I'll quickly draw a box here. So we went into that zone. And if you go back to where we are at currently, let's just delete this box. There is a lighter one, and I'll quickly just make it a bit better for you guys to see. So you can see we are still above that 786 and 887 zone. So I think we still can come down to go into that zone. And if you go to Bitcoin, which one? You can take any one. But if you can, let me just take another Bitcoin one, sorry. If you can take Bitcoin, and you'll see here, let me just remove the drawings. You can see the same with the 382 area. It likes that 382 area again. So what I'm waiting for is, I think we can, sorry if I'm boring you guys or whatever, but I think we can go back to the 37 area. If this is the bottom, I think we can go back to the $37,000 area, and that is at the 382. And then we can continue on downwards maybe, but we will see. Because if you look at this, and Jason, you can maybe, and this is on the weekly, guys, this is all just on the weekly. And Jason, you can maybe tell me what you're thinking about this. But you guys can see, and I'm going to open this bigger, where did the move start that brought all of this downward momentum? And that was at this high. That was where the move started downwards. So for me, you can say that is one as well. But for me, that is the real high that I would like to see break until I am really like, I'm saying, okay, the bull run is on again. That high there, because that is the high that brought us to where we are at currently. So because you can see we did make high highs here, higher lows, and then boom, we just went downwards in theory. So that's what.
Sorry, Andre, the one comment that I've got for you now is that we haven't seen massive volume come in with a massive spark up.
Yeah.
That we normally see when we get to the bottom.
Yeah.
where all
Yeah,
the
exactly.
buyers enter at the same time. We haven't seen that volume.
Yeah, exactly. And that's where and if you go to the 4-hour, you can see we do have some strong bullish divergence to the upward side. And that is really good. But for me personally, let me just open this bigger for you guys to see. So in short time frame, I would like us to go above that high. I would like us to see us move above this line here. That's when, we can maybe see that $37,000 area which we were talking about now. But okay, let's go to what I actually wanted to share with you guys tonight, and that is a VRVP. And I'll quickly go to the indicators. VRVP. So it's a visible range volume profile. And you guys can maybe take a screenshot or something about that. Visible range volume profile. I should have added that one. But anyways, this tool you can see at the right, and I made mine. I made mine so that it looks nice with my candles and stuff like that. So you can see at the right. So this is basically how much volume there was at current prices. And let me just get to my chart here on the weekly. And get to the PLX. This is the one with the most candles. Wait, let me just get sorry, I just want to get my orders. Oh, there we are now. Sorry, guys. Okay, so you can see here where it goes to the left the most, you can see that is a lot of volume. That's a lot of volume. Where it is less volume, that is where you want to buy. Because usually that is an easy area to get filled. Where there's a lot of volume like that, that is hard. That is like really hard resistance. It's going to be really hard to go through that. And why I say it's really hard to go through that. So what happens is there's a lot of orders. So a lot of people bought Bitcoin at that area. So obviously the people that bought there, they would defend their orders there. So they would probably buy up here more and defend their orders. The whales, the big guys, they would defend.
Smith, it sounds as if we lost you. We don't hear you. If you can hear us, know that we cannot hear you. So I'm just going to stop your share of your screen so that we grab something back here. Are you
Sorry,
back?
I'm back. My inverter just went down, but let's just quickly see if I can share my screen again. Can you guys see? There's my trading. Can you guys see my trading?
Yes, there we are on your chart.
Okay, this is so small for me now. Anyway, so basically what happens is there's a lot of people that bought there, so they would defend that areas. And here in the corner, where you see there's not a lot of volume, the market easily goes to that area. So you can see here we have a bit more volume than we have there. So that's why I think, and you guys know for a long time that I really like the 786 and 887 zone, and that's why I already had my orders there. But you can see here that order there by $14,000 between 13 and almost 16, $13 and $16,000. You can see there's not a lot of volume there. And that's why I think that order will fill there. But this order there, I really doubt that it's going to fill. I just think that because there's a lot of more volume than that, because, look at that volume. The tool again, guys, it is, let me just move the stuff away. The VRVP, volume range profile, something like that. So it's a really interesting tool, and it works on the total market cap as well. And I know it's a bit busy. Let me just delete this stuff. Okay, so you see where we are at currently? You can see there's not a lot of volume where we are there. But here, there was a lot of volume, exactly like on Bitcoin chart. There's a lot of volume. And you can see, because the market ranged in this area for a long time, and that's why there's a lot of volume. But let me not bore you guys with too much. The one thing I want to show you guys quickly is on the USDT dominance chart, exactly like what I showed you guys on Bitcoin. So we want USDT to go down for the people to get back into the market. And you guys can see we have a strong bearish divergence, which is good. But exactly like Bitcoin, I would like us to see go below this low. But thanks. This is what I wanted to share with you guys.
Cool. Thank you, Phip Smith. And you always stun us with the stuff that you bring out here on a Monday evening. So thank you very much. I have to go check your VRVP and I'll go plot that myself. And I know the moment that you plot it, I know that I've seen that in 2018, 2019, and I knew where to switch it on, but I did not even thought about that. So thank you, Andre. We appreciate that. Then allow me to direct you to our Facebook, YouTube channel, the Crypto School. Please go and subscribe to the YouTube channel. Make sure that you subscribe to the channel. Make sure that you hit the bell so that you get the updates. And you can see here that we get good traction on our videos. 2 weeks ago, we had 300 views on our Crypto Talk. Last week, we had 200 views on our Crypto Talk. And go make sure you share this with your family and friends. It is a place to get good information. And we would like to encourage you to go visit our YouTube channel, to subscribe and to hit the bell so that you get the information or get informed that when we go live or when we post a new video, that you are aware of what's happening. But let's quickly go to Crypto Wealth Coach, Marius. And I know he's on the call. And Marius, I don't know where you at this moment with regards to trading and whether you're just sitting on your hands and out of the market, or let me not preempt something. Please share with us where you're at.
Yes, Daniel, I'm like a rugby supporter. I'm sitting on the pavilion and I'm looking at the market. I'm not trading at the moment. For me, I'm a longer-term trader and a swing trader. I'm just going to sit on my hands. But yeah, I've got two hashtags here. The one is hashtag need fresh dollars, and the other one is hashtag stop losses. And I think, yeah, it's a good lesson that we learned over the last few months is when we are in a bull run, it is necessary to take your profits and to make sure that your stop losses are in order. Yeah, I just want to ask Jason and Mr. Phip Smith tonight, for the guys that's still in the market, is it better for them to hold or must they sell now? And the last thing, Jason, before we part tonight, I think we must just do a drone view and see the growth of Bitcoin and crypto over the years, so that and we know the long-term vision of crypto is that there is still a lot of growth. And I think it's a good thing to end tonight, just to give the audience hope to know, don't just look at the market today or the last few months, but look at the longer-term vision. Yeah, that's all from me. Thanks, Daniel.
Well, thank you, Marius. And you just taught us a new term there, the drone view. It used to be a helicopter view, and now all of a sudden it's the drone view. Yeah, thank you. Thank you for that. And the drone view. So let's just pop out. But Jason, we're back with you. And as I have there on the screen at the moment, I have the address for the Facebook page for the Crypto School. And please go subscribe to our Facebook page. That's where we're going live at the moment. Maybe some of you are on that call. I know most of you are on the Zoom call, but we are on the Crypto School. And from there, we go post it onto YouTube. Jason, back to you, buddy. You still have a load to share with us.
So Marius asked me to give the drone view there. So in the last, Bitcoin's been around for what, 12 years now, and it started at 1 cent. Today, after 12 years later, we are $20,000 from 1 cent. So where could price go in the next 10 years? We've got some forecasters saying that it can even go up to $5 million for one coin, or even $7 million for one coin. But let us just have a look at the stats on Bitcoin, and just to see exactly where we are sitting at the moment. So this is from a website called coinblockhalf.com. So the total of Bitcoins in circulation is currently at 19 million. Just remember, out of that 19 million, 4 million have lost. In the early years when Bitcoin was worth nothing, a lot of people threw away their hard drives and they stored Bitcoin on and threw it away. So there's estimated 4 million lost in circulation. So that number should be at 15 million. There will only ever be 21 million. So there's 2 more million that have to be mined here. So the total, yeah, there it says, total Bitcoins left to be mined is 1,927,000. And then if we go down here, Bitcoin's price today, 20,000. Bitcoins generated per day is 900. Okay, then they talk about the inflation rates. There's a whole lot of different stats here. But it's a deflationary product. And this number is an important thing. How many people in the world? And one day each person will want a piece of Bitcoin. So as the fundamentals and the technology expand, Bitcoin is going to be viewed as a case for storage. So there's going to be more and more demand for it, but this number is going to stay at 21 minus 4, at 17 million for all the people in the world. So the price has to move up as time goes on. And as I said, the clever guys out there say Bitcoin will go to between $5 million and $7 million one day. If we just think of where we come from, as I say, from the last 12 years, from 1 cent to $20,000, and we apply the same sort of increase, compounding increase over the next 10 years, where will we be? So to answer your question there, Marius, this is a bargain price at 20,000. This is my view. The last chart I wanted to show you was back to Bitcoin again. And we've been in this falling bullish wedge pretty much from the beginning of this year. You can see we went up, hit resistance here in March, hit resistance here in May again, came down to support in the middle of May, went back up, hit resistance on the 7th of June. And this is supposed to be a bullish pennant where we're supposed to 68% chance to break to the upside. But unfortunately, you can see what happened. We broke to the downside. And we broke with quite violent volume, quite a bit of volume here last week, Monday. Now, we haven't gone up to test this level here of the breakout, which is around about 24,000. So my belief, and it's what is just crystal ball stuff, but look here what the chart is saying is that we've got bullish divergence. If we take the 15th of June, where the RSI is lower than what it is today, yet on the 15th was higher than it was today. This is bullish divergence on the 4-hour. We're hoping that this does play out, I should say. And we do have come up here from this 20,000 level up to 24,000 and do a retest at least. And then see from there where we're going to go to. That is what I am seeing. But as I said, we have to take day by day, see where we are, see what the charts are telling us, and then take it from there. And that's it from our side.
Cool. Thank you, Jason. And you always have the ability to just show us Marius's drone view. Marius called it, and you can show it exactly what it is. Fib Smith, last comments for the evening from you.
Yeah, thanks, Jason. There's actually one thing I want to show you guys, and I'm looking for my other screens, but I don't have them because the electricity is off. But there is let me just move this stuff. There's just one thing I want you guys to note. If you just draw in here 2 simple trend lines. You have that big trend line from the 10th of November, 2021, and then it touches on the 30th of March, 2021. So you can see that trend line there is at that 38.2. And to answer question, personally, I wouldn't sell here where we are now. And I didn't want to sell where we were at there either. So there's two things that you can do, but whatever, it must make sense to you. So first of all, this trend line, this is a shorter term trend line. So it can maybe go to that area and go down even a bit more. But whatever you want to do. So you can maybe, for instance, take 20% off the table there, and then take another 40% off the table there, whatever floats your boat, they say. But there's actually a tool that Jason usually showed. And that thing freaked me out because it doesn't make sense, but it makes sense. And this is this moon something thing. So it works based on the moon. So you can see every time it was at there's a dot at the bottom, the market goes up, and with a dot at the top, it goes down. So it doesn't make sense, but it works. And you can see here, we are actually at the bottom here. So in theory, we should go up now again until there's another dot at the top.
So full moon at the bottom and new moon at the top.
Yes, that thing.
Other way around.
So,
No?
yeah. So you become a werewolf at the top, and yeah. So guys, so if you ask me, I'm so happy because I've waited so long for Bitcoin to be so cheap as where we are at now. That's why I placed my orders even before. And personally, that's not really the way to do it because everybody says it's like catching a falling knife. But I had my orders in there. I'm not missing this opportunity. So that's how I feel about the market. And I know the alts may bleed a bit more than Bitcoin, but this is where I bought Bitcoin. I'm super bullish about Bitcoin. And from where I bought there, and that was really low, 18,668, till the next one is another 25% almost. Yeah, there's still a bit of a drop coming, and it doesn't say it has to take a month and then we're going on again. It can take maybe a year and a half. We don't know. And the same for Ethereum. My second order just missed. You can see there, it just missed. That's like by, I don't know, 3%. Yeah, not even 3%, 2.5%. So yeah, that's how bullish I am, Maurice, if you ask me. I just want to buy, and I know everybody, like not a lot of people has some cash to buy here, but that's how I'm feeling about the market. So yeah, don't let the emotions get you guys. This is buy. I've never seen the fear and greed at where we are now, and yesterday like 6. The lowest I saw was 8. Oh no, this is really bullish for me. Anyways, let me stop speaking because I'm getting excited now.
Smith, I agree with you. And I'm talking to people on a regular basis saying, but what should we do? We want to get into the market. And I have people on the call, Derek and Anita. I see Derek is on the call. They want to get into the market. And since we started talking, we were in this downward spiral, downward trend. And they couldn't understand because I didn't help them to get into the market with all their cash. And this is the reason why. So what do I say? Remember, we don't give financial advice. We're not financial advisors. But we just talk and in our community say what we say. What I do is any person that say, I want to buy crypto now, it's low, the price is low, I want to buy crypto. Whatever you have on the table, whatever money you have on the table, cut it in 3 to 5. If you have $100, cut it in 3 to 5. If you have $1,000, cut it between 3 portions and 5 portions and buy with 1 portion today. Buy with 1 portion. Buy today. Get 1 portion into the market. That's for those that don't have crypto but want to get into the market. So cut your $1,000 into 5 $200 portions. Buy one $200 today, whichever crypto you want to buy. The next $200 that you want to buy today, go the coins that you want to buy. Put in orders that's 10% less than where the price is today. Put in orders with that next lot of money. Put in an order that's 10% less than what you want, that you purchase for today. In a week's time, in 2 weeks' time, whatever your plan is, let's say your plan is in a week's time, the same time you're going to the market, if those orders did not fall, you cancel them and you take that money and you buy at that price Bitcoin. You then take the next lot, whatever the price is that day, you go full in order, place orders for 10% down. A week later, if they did not fall, you cancel them and you place them at that day. But you will find in this time, most of the time, those orders will fall. Every time that you get to your orders, the orders fall because the market had spikes down. And there's a coin that I tried to sell and I couldn't sell, and I've put an order in it to sell it 5 weeks ago, a specific one. I don't want to use the name now, but I've put in a sell order on that coin. And that sell order last week, Thursday, when I looked at my orders again, I've seen that sell order was now 49% above where the price was over the weekend. It filled Friday night, Saturday morning, before we had the next drop. That order filled. There was a spike, one spike. Someone put in an order that bought the market, and my sell order was filled at 39% more than what the price was at that average price was at that very moment for that little period of time. And so if you want to get into the market now, take your capital, divide it in 5 or divide it in 3. If it's not a lot of capital, take one lot of that, buy immediately at the price it is. The next lot of that, put in an order 10% below the market, wait for a week or 2 weeks. Just write the plan now. Write the plan now before you get into the market. Write the plan. I will do it every 15 days. Okay, cool. You put in a buy order 10% lower than today. And in 15 days time, if it haven't filled, you cancel the order and you buy at that very price. But that same day, wherever the price is 10% lower, you set the next lot of buy orders and see what happens in the next week or 2 weeks or whatever your thing is. The key is, we always say you have to have a plan, and then you go do the strategy according to your plan. Marius, last comment for you before I ask for the last comment from Jason, then we're done for tonight.
Yeah, Daniel, thank you for that, Jason. Yeah, guys, if you're, and I love what Andre said, if you're stuck in your coins, just hold. What I love about crypto is it's an asset. So if you don't sell, you don't lose. Just keep holding if you are still holding, and the price will eventually go up again. Awesome, thanks.
Thank you, Marius. Jason, last one from you, then we're done for the evening.
Judging by Elon Musk's tweet over the weekend about Dogecoin, it must have been Dogecoin that you're trying to sell, eh? So this morning I referred Bitcoin to like a endowment policy that insurance broker tried to sell you a couple of years ago. I'm talking about 30 years ago. I can remember taking out my first endowment policy where they came up with this massive projected figure that I would get after 5 or 10 years of holding and paying my policy on a monthly basis. Now, the same applies to Bitcoin. Like Marius says, we need to take a helicopter view, a bigger view, to see where we're going to be in 5 to 10 years' time. And rather not look at the price on a daily basis, rather look at it once a year or whatever, and see, and you'll get a different view if you rather look at it on a monthly basis or on a yearly basis than trying to look at the Bitcoin price on a daily basis. And I'm not the one to give that advice because I look at the Bitcoin price every 5 minutes. Yeah. But we know that the price of Bitcoin is going to go to 5,000 or 5 million or $7 million one day. So it's still early days for us. We're still new in the space, and you will see that there will be a lot of good years to come in the future. Thanks, everybody.
Cool. Thank you, Jason. We appreciate that. And as Phipps Smith showed us earlier today, he's got his order in, his first order filled for the next 7 or 8 Bitcoins that he purchased. And he's got another order in for another 8 or 10 purchase a little lower, and another 20 Bitcoin a little lower. All we have to do is we have to accumulate as much crypto as we possibly can at this time. And unfortunately, we're taking it away from people that capitulate, people that get out of the market, people that fall for this bear trap, asking me. I have people on this call that this week asked me, should I get out of my crypto because it's going to disappear? People phone me that's on this call to say, tell me, is crypto going to disappear? Should I get out? This past week. And the good news is, no, it's not going to disappear. It's going to be there. Just stay in the market and make sure you stay there longer than the other people. And we know that we're going to have it. Ladies and gentlemen, thank you for a good evening. Thank you for joining us tonight. And thank you, Jason, our subject matter expert at the crypto school regarding crypto trading. Thank you, Phipps Smith, for the young gun, for your contribution. And thank you, Marius, for your contribution. Ladies and gentlemen, we wish you green candles in the week ahead. Have a blessed one. Bye-bye.